We're thrilled to have you on this big day. It's not an IPO day, it's a direct listing day, which is a different thing. So just explain what is actually happening so people understand.
All right, I'll do this one pretty briefly. So in a traditional IPO, you have underwriters who commit to buying the shares. They kind of pitch them to a small group of investors.
Right.
All of that happens in private. Only those shares are available to trade, and the rest are locked up. And that might be 90% are locked up and 10% are traded. In a direct listing, potentially 100% of the shares are tradable, and there's many sellers and there's many buyers, so you should find a market clearing price earlier. The big thing for us was, in a traditional IPO, it's the company that's offering shares. And you might raise, $1 billion or something like that. When you raise $1 billion, you dilute existing shareholders by issuing new shares. So we're not doing that. We're just opening it up for trading.
So there's no money raise.
No.
You have about $800 million in the bank already. So this is unusual because not a lot of companies can actually pull this off as such. But also, you're rewriting the model to some degree. Wall Street, I imagine, did not like this.
Everyone says they like it. We'll see how much I don't know how much they really like it, but I think there's a lot of investors who are used to a model where they get a small allocation, they wanted a big one. In direct listing, at least they have the opportunity. And I think you saw that with Spotify. Some early institutional investors taking huge positions on day one, whereas in a traditional IPO, they might have only got 25 or 50 million.
To the extent there are other companies out there like an Airbnb looking at this to say, does this work? How much are you going to save in fees, Wall Street fees?
The savings aren't that great, to be honest. And that's certainly not the motivator. The big one for us was not having to raise new capital. I think there is, one of the hopes for a company like us is that there's not too much volatility. And we are hoping that this model, where there's many sellers, many buyers, supply and demand, we reach a market clearing price a lot earlier. One
of the other distinctions, though, is there is no lockup. Typically, there's lockup on early investors, sometimes employees. Yep. You can sell shares into this yourself.
I can, although as a Section 16 officer of a public company, I'm not free to just buy and sell.
So you won't be selling into this?
I have some small sales.
And long term, though, the other piece of this is sometimes there's a view that the company will do a listing and then do a secondary, which actually looks like an IPO later.
Yeah. That's certainly possible for us. I think one of the things about being public is it opens up capital markets generally. So not just equity, but debt, converts, all kinds of stuff.
Tell us how this changes the company. Does it change it at all?
No, I mean, it's a big day. It's a nice moment. And I think especially a nice moment for the team to show some appreciation and recognition to one another for all the hard work. For us, we spent the last couple of weeks writing thank you notes to customers and sending them out, so they hopefully would arrive around today. But we're, low single-digit percentage penetrated into what we think is just an enormous market. There's 10 million daily active users, but there's a couple 100 million people whose working lives are mediated by email, and they would all be better off with Slack or something like it. So that's the focus. Okay,
let's talk about the valuation. This is a company, I should say, that still loses money, about $138 million.
Yeah.
Your revenue. You have a huge revenue number, but it's coming down. We were in the 80+% range. Now, in 2020, you're predicting it's going to be closer to 50%.
Yeah.
How should investors think about that? How should they think about your valuation?
I'm not going to give them advice on that. We're still in the quiet period, but I would say this. So we in fiscal 2017, 105 million revenue. 18 was 220. Last year was a little over 400. We've guided to 590 to 600 for this year. So those are big numbers, and these are numbers that wouldn't have been private company numbers before. We're getting to be at scale, and so the percentage rate of growth, I think, is you got to balance that with the absolute number of dollars coming in.